Mao, welcome once again. One of our initial cohort members. He's been shaping a lot of how we do things at Landa, especially around sales. He's been a really good advisor and gives us tips pretty consistently. In terms of the format of this conversation, I mentioned this before, but it's usually between 30 to 40 minutes Q&A, usually like a podcast scenario. If you have any questions beforehand, please drop it in the chat. We're going to leave 20 minutes after if you want to ask anything directly to Mauricio. So Mau, once again, welcome to Landa Talks. I would just love to start by you telling us a little bit more about your background, your experience. Who is Mauricio?
Thanks, Chukan. Hi, everybody. Nice to be here. Appreciate it to the Landa team for inviting me. Just a quick background. My name is Mauricio. I've been in sales, B2B tech my entire career. I love to say that I've been in startups my entire career. That's kind of not entirely true because I worked at HubSpot when HubSpot was already a public company, but spent almost 5 years there when the LATAM team was just an experiment. It was under 200K of ARR, and it was just like 7 of us. And we took that business, opened the office in Bogota, grew it to about 200 folks in headcount and about 16 million. That business today of ARR, that business today is around like 100 to 120 million in ARR. So they're doing pretty well. And I've gravitated around, very early stage startups, anywhere from pre-seed to Series A, not just as an operator, but, as an advisor, investor, coach. I'm also part of accelerators, funds, VCs in the United States and in Latin America. I was raised in Colombia, but I'm from Boston. And my entire professional career, I've lived in Boston. Well, that's actually not entirely true. I'm in Paraguay now because I'm married a Paraguayan. So after the pandemic, I guess I've been a nomad for the past 4 years. But yeah, that's a little bit about me. Again, love sales, love tech, love startups, and love events like this. So again, thanks, Chuko and Landa, for having me.
Beautiful. Yeah, I also saw you built your own podcast. I think it was like about a year ago, right? So congrats on that. I guess one more question that I had around this story was obviously your transition into fractional work, right? Like what led to you starting? What's your story about your first client?
Yeah, so I guess ever since I started working with startups around, or more purposefully, because around 5 years ago, I was still just an operator. And back in the day at HubSpot, I just out of the passion of meeting people and learning their stories and what makes them passionate, I started doing Startup Fridays, right? So I would just sit down with startups that wanted to buy HubSpot for Startups, not really to sell them HubSpot for Startups, but rather just learn about their lives. And that generated like a bunch of traction in the sense that these folks started to want to work with me on the side besides the purchase of HubSpot. So asking me a lot of advice of how to implement a sales process, how to optimize the CRM for their needs. So I kind of became their unofficial like CSM/coach on the side. It was kind of a weird role, but it was a lot of fun. And then actually, Stockpress was one of my first clients. I joined Stage 2 Capital as a limited partner, and then the fund invested in Stockpress, and Stockpress was looking for, a sales advisor, and the fund recommended me. I had multiple conversations with Ian and Jess, and I came in as an advisor. They gave me equity, of course, being an early stage startup, that's typically what you see. And that was a great relationship that is still ongoing. I've worked with them for north of 3 years now, and I even worked full-time for a short stint. So that's, and I know it's a long answer because that question is kind of a loaded question, because I sort of, my clients, I consider them more like my startups and my investments, and not so much the short-term, medium-term projects like 3 to 6 months where I come in and help them with something specific. I'm more of the type of advisor that comes in as advisor slash angel investor. So I guess I'm very picky with the startups that I work with, not because I don't want to invest in all of them. I would love to invest in all of them, but I don't have time for everybody, unfortunately. Would love to clone myself. So yeah, that's a story of technically my first fractional client.
I love it. Yeah. Also, you get a little bit of skin in the game. I guess going down to niche, right? Because you talked about many different kind of services within this answer. But I would just be curious to hear, how did you consolidate your unique value proposition, and how kind of that niche evolved over time? So what are you offering right now once you're talking to a prospective client around what you do? What's the specific kind of niche for you these days? I'm curious.
Yeah, absolutely. So I lived this multiple times as an operator, and then what Stockbreast taught me is um, a lot of startups and a lot of businesses have the same questions, right? So when I was an operator and I lived through it at HubSpot, I guess I wasn't very conscious about it because I was just an individual contributor then, and then I went to Treble, and then to Core, and then to Melon, and in every single startup as an operator, I asked myself, like, what is the next best step to take this business from point A to point B? And given that Stockbridge was a bootstrap business, they were in pre-seed and they were transitioning because they previously had an agency and they built Stockbridge for them as a SaaS solution. And their clients started asking them to buy the solution for themselves. So they decided to, shut down the agency and transition to a, SaaS B2B. And it was the first time doing that. So they had a bunch of the similar questions that I had as an operator when, as I try to, solve this in my day to day. And then after Stockpress, I got involved with other startups within the stage 2 capital ecosystem. And then came Figma in Colombia, and then Landa, and then Landa in Paraguay. And I've seen that the startups, mainly, that's my niche, have the same exact questions. Like when you're a founder, like regardless if it's first time, second time, third time founder, if you're bootstrapping, if you're seed strapping, if you're going full on VC, typically what I see is like, all right, how do I go from founder-led sales to hiring a sales team? How do I prove that message, or how do I achieve message market fit? How do I go from that stage to product market fit? What is product market fit? How can I prove my value as a startup to raise money? How can I think about that go-to-market stage and my growth and my moat and my differentiation, like the whatever unique and whatever makes me different in the market. So what I bring to these startups, probably not unique because I'm not like made of gold or anything. But what I've learned is many have the same questions, right? And I've lived through just finding the answer as an operator. I've screwed up multiple times. So I have that blend of, I'm not just an operator. I've also, like, I've been on your shoes. I'm willing to, not just invest my time, but my money, and sort of be a very active advisor where I come in sort of like a fractional leader, specifically focused on go to market. Sometimes I can be like their first rep. Sometimes I'm just an advisor, right? So a little bit more hands off. But in 95% of the cases, I come in as an angel investor, and that's not just investing my time, but also my money.
Beautiful. I think like that's pretty special. We don't get a lot of guests to have this model, so I think a lot of learnings there. I guess quick segue to compensation structure, right? Because obviously you're doing a deal for equity. That's like part of the compensation structure in a way. There's carry. There's like obviously an incentive for them to do well. Around the cash structure, what works best for you in general? Like, do you do retainers? Is there a variable for you, especially if you're in sales? What's worked for you in the past? I'm curious.
Yeah, that's a good question, and it really depends on the conversation and what you as an advisor are comfortable with. I myself tend to be very aggressive, um, and that's why I'm very picky in the bets that I place. Not just because it's my time, but it's also my money. And given that I typically advise startups, in the pre-seed to seed stage, and most of them, if not all of them, have some sort of either family office or potential VC, like institutional investors in the cap table. And if they don't have it today, they want them there in the future. I also have to be very careful with the perception that the founder is, gets from those conversations. So that is typically why I come in as an angel investor as well. And I also understand that, I mean, if I'm going to ask them for, I don't know, $200, $300 an hour, man, they can hire a team in LATAM for that money, right? It's like, why would they pay me? Like, in what money? They don't have money to pay me. So that's why I tend to go the options route, right? Of course, it's a calculation of not just my time, but also the multiples that I expect. It's typically a retainer, right? And depending on the need of each project, right? Some, I found that in this stage, startups really at most need an hour of my time a day. More than that, they have a lot of shit to solve through. They kind of don't need me there more than 1 hour a day. That's like the absolute max. The absolute minimum is an hour every 2 weeks. And if it's actually, if it's an hour every 2 weeks, I even think twice about accepting the project because a lot of things can change in 2 weeks in startup universe. And that also is not going to help me be able to implement a retainer that's juicy enough to justify my consulting hours. I tend to, to bill at least 4 hours a month, right? And depending on the project, I tend to gravitate between $300 to $500 an hour. Of course, there's a premium because you're not getting cash, you're getting risk. So of course, I tend to add a premium there. And given, that I tend to also come in as an angel investor, I don't come in like day one, I don't make that decision. Like if there's great synergy with the founding team and I'm adding value, then typically between week 4 to week 6, that's where I make the decision to come in and just add some cash to that safe that we already have signed. And just for transparency, that tends to be like these safes tend to be between 15 to 30,000. Anything under 15, I don't think it's the founders. Like, I don't feel that I'm valuable enough for the founder. So it's not worth the founder's time to have me there helping them if I don't have at least a 15K safe signed. But that's just me because I'm crazy.
No, that's pretty interesting. I guess like you have a lot of skin in the game, right? I guess one question that comes to mind is, have you gone into a situation where, 4 weeks come in, 6 weeks come in, you go into this deal, you invest a little bit of money, right? 15 to 30K. But then after a while, you just realize like things weren't as expected. The guys were considering a completely different direction, which you're not aligned to. How do you go about handling those situations? I'm curious. And have you
Yeah.
gone
So
through these before?
yeah. So I guess I'll share two stories. The first one, initially it was a cash. Well, I wanted equity. The founder didn't want to give equity out. It was sort of a cash cow business for him. There's a friend from college that hired me to sort of help him sell. And we found out really quickly, about like week 4 to 6, 4 to 5 actually, that he wanted to continue implementing a very completely different vision that what I was going to bring to the table. And I decided to, cut bait in that, like, entirely, not even invest in the business for two reasons. Number one, I kind of felt that I was not the right type of advisor for him. And number two, it was a completely different business model to what I'm used to. So I even came in and I felt that, we were trying to make this work because of the personal relationship that we were having, or that we had over the years, but we were kind of forcing it professionally. And we had that close relationship that's sort of like we were both, we knew that it was not working out, but we still wanted it to like work out because we wanted to just remain in the fairy tale land. But then one day we just cut the shit and, just had a very honest and open conversation. And I just decided to just walk away from everything, not invest, and then he went out to do very well and continue the path that he's at right now. And a year ago, he actually acquired another business, and he's doing probably like 10 million a year, and it's only like 5 employees. It's nuts. Yeah, yeah, he's doing pretty well for himself. Um, I kind of feel bad that I didn't invest. No, no, it's those decisions that I guess sometimes the relationship supersedes the money.
Agreed.
And then the other story, um, man, I've invested in businesses that have gone under, of course. And that's something that in the realm or in the universe that I gravitate, you just don't know until it's too late. And that, like, sometimes it's a mix between between ego, between happy years, between there's actually a book about this, The Investor's Dilemma. And it was my first two investments went under, and I didn't want to sort of realize that. And I continued just like pushing something that was already dead. And that helped me learn a ton about myself. I'm still crazy and still investing in businesses, but I try to remove emotion from it.
Cool. Amazing. Great stories. I relate to a lot of them, honestly. I guess one last thing to talk about kind of this topic is just boundaries, because I know advisors just struggle with this a lot. How do you go about this, right? On just not being considered just another kind of part-time employee when you're doing these kind of gigs, right? What's been your playbook or any sort of tips you can share for us?
It's gotta be in writing. It's gotta be in writing, and you
Go deeper,
have
go deeper.
to have to have a signed contract. Regardless who the person in the business is, you have to sign a contract. It doesn't matter if let's say if you give away free hours, that has to be in writing. Because in startup world, there are many things like you and the founding team, everybody's going to be doing so many things at the same time that sometimes you're going to forget things. And you're going to have two different stories. So just put it on paper, everything. Because if you don't have it on paper, you don't have it at all. Regardless if you're giving 3 hours or free shit, put it on paper. Just draft a contract, say my commitment is going to be this, is going to be XYZ, it's going to be 5 hours a month. It's going to be, let's say 5 hours a month, and here's my WhatsApp and here's my calendar. And I'm willing and able to give you async feedback, but up to X. Or if you ping me in a weekend, I will not respond. Or, that kind of stuff. Like, set the guardrails for yourself, because if it's not in writing, some founders, unfortunately, will think that you are a founder yourself and will take you up on the offer, and you will be working Sundays. So you got to be very careful with that. So it's better to draw the line very, very early and put it in writing so that you never have to cross that line. And if you start crossing that line or you feel pressured, it kind of sucks. But like weddings, just like something is not going right, just pull out the fucking contract. Say this is not what we signed. So that's what I would suggest. Oh, and by the wedding example, it's not the marriage itself. It's actually the at the wedding party, where I've also seen it all, and it kind of sucks. Where couples try to, they got screwed by the venues, unfortunately. Anyway, moving on. I don't want to go into a tangent.
No. This is great, because I feel like usually when you talk about contracts, people add a lot of clauses to scope, but not necessarily availability forms of communication. But I think it's actually a pretty valuable point. I wanted to switch. Go ahead.
I mean, in my experience, and this is of course specific to every single advisor, because I mean, at least in the universe that I gravitate, given there are so many questions and so little answers, and it's so freaking unpredictable, it's going to be very hard to really understand what the scope looks like. I mean, you think that the project is going to look like A, but then a couple of weeks go by and it's a completely different project. So in my specific scenario, I tend to leave scope very, very like tip of the iceberg kind of situation. Like I don't try or tend to sort of abide by specifically like what are the goals of the contract, but rather how much time am I going to invest here, and what does a great relationship look like, and what does a great project look like, and what does a shitty relationship look like, and a shitty or failed project look like. I think that is very important to have like those two reference points, but right in the middle, just because I have no clue what's going to happen, the founders don't either. We leave it to interpretation. Like, we have those guardrails, we have the time. Let's just freaking go after it. And I don't know if you all work with startups, but what I also do, and I got to protect my time here. If it's 4 hours a month, it's 4 hours a month. It's not 2 hours one month and 6 hours another. It doesn't accrue. It's 4 hours each month. You miss the hour or the cut. Sorry, it's not a buffet here.
For sure. For sure. I wanted to switch gears to sales because we're already about 30 minutes in and definitely want to pick your brains a lot on this, right? So I just wanted to start with obviously how do you run your client pipeline, right? What are some tips you might give us around just generating new leads consistently? I'm curious.
Oh man, I don't. I
Go
work
deeper, deeper.
I work exclusively on referrals,
Okay.
100% on referrals. Um, I don't know. I guess that just came organically, and today I cannot keep up with the intros. If anybody wants to work with me and help me like tag team this, I'm willing to like introduce like 6, 7 startups right now that want my help. No man, quite transparently, I've never had to cold message or cold call anybody. I feel that not just me, but everybody has uh, a great and very strong network. And I feel that we all have the same issue is how the hell do we activate our network? Not just to add value to that network, but to get that network to add value to us.
Let's switch it up.
And
How do you
go ahead.
activate your network?
Man, a lot of what's up in an Excel fucking spreadsheet to understand when was the last time that I pinged X and Y founder. And I've actually screwed up multiple times where let's say I try to connect 2 founders and I was like, Evan, you should meet Joanne or whatever. And then 4, 6 months go by and then I speak to Evan again. It's like, oh shit, I should introduce this dude to Joanne or to XYZ founder. And then I send another email and I get a text from Joanne or from the other founder. It's like, dude, I had a conversation with this guy like 3 months ago. It's like, God damn it. So it's hard. That's why I try to implement HubSpot for that, but failed miserably. So I go the old route of the oldest CRM or the best CRM, and I do Excel. But I try to keep up with my startups and my relationships in buckets, right? Big accounts once a week, a medium accounts once a month, and small accounts once a quarter.
Beautiful. Beautiful. And you also mentioned, I think it was earlier in the call, but you mentioned PMF, and this is the magic word in sales, right? How do you think about PMF? I'm curious.
Oh man, that this warrants another conversation. Product market fit. I feel that many companies still think that PMS is a function of revenue. It's not, or volume. It's not. It's a function of retention. How you get to that, there's a bunch of different ways, but if you're trying to raise money and the VC tells you that that you've hit product market fit because you have $1 million in revenue, don't sign that check, because what happens when that million evaporates because they didn't renew?
Beautiful.
So function of retention, it's never a function of revenue. If there's value, there's retention. If there's value, there's money.
And if there's no retention, there's no business.
Exactly.
Cool. Cool, man. I guess I wanted to switch gears also to your work with clients, right? And you also have a couple very, very nice stats with the companies you worked in, like for example, Melon, I think you put this in your LinkedIn, like reducing sales cycle by 29%, et cetera. I guess general tips for founders specifically looking to optimize their sales processes. Like what have you seen is working, especially these days? These days, things are changing so rapidly. What are you seeing that works right now? I'm curious.
So there's no silver bullet. But what I found that has helped me stay a little bit sane or less crazy is try to add as much structure as I can to my process. there's actually a great book that I, I could die for this book, and it has really helped me to not just shape my personal but professional life, both as an operator, investor, coach, advisor, X role that I take. And it's The Score Takes Care of Itself by Bill Walsh. It's a great, great book. If know nothing about football, American football, doesn't matter. I you know, I don't know much of the like technical aspects of football, and it's still my favorite book. I would really advise everybody to read that. And another great book is The 10X Rule by Grant Cardone, and the famous Start with Why and Find Your Why and the Golden Circle by Simon Sinek. So those 4 books are amazing books. And why do I bring this to the table? Because I feel that reducing the sales cycle, or generating X revenue, or going public, or whatever it is that you achieved, that's awesome. That's just a result. It's like the process that you built gets that result. And a perfect process is 1,000 times better, regardless if you have an imperfect result versus a perfect result with imperfect processes. Because the former, if you have a perfect process, you can scale that. You can trim around the edges. You can perfect it. And then eventually the results will come. Specifically, what I found in sales is, and this happened to me as an individual contributor, as a leader, as an operator. Initially, I thought that success in sales was all about, or highly measured on, how many deals you generated, or how many conversations you had, and how many of those conversations actually closed. And then I found out with time that that's actually bullshit. It's not about pipeline generation and pipeline execution. It's about pipeline progression. It's about the value that you can add to that prospect, and that prospect can add to your business in every single step of the way. And if you obsess about pipeline generation and pipeline execution, you are going to obsess about a tree that's in a forest. So my advice is just obsess about the experience, and specifically about the pipeline progression. It's like, what's the value being given, and what is the value being received? Because it's a two-way street. And don't think about sales as a function of selling. Think about sales as a function of helping people buy and solve problems and kick off projects. Because at least in tech and in SaaS, every single company buys technology because they have a problem. And every single company buys technology because they have a project that they started to solve that problem. And whatever they're buying is just a piece of the puzzle. Let's say you buy HubSpot as a CRM. That's just a piece of the puzzle. That's part of the project that's going to aim to solve that problem. So don't be salesy and say, oh yeah, HubSpot's the best CRM ever. You should buy, and then we're going to solve all your problems. That's bullshit. Obsess about the experience, obsess about that pipeline progression, and about the value that your solution can provide to those prospects. And of course, the value that that prospect is going to give to you. And if you obsess about that, you're going to see reduction in sales cycle, and increased ASP, increased deal generation. You're closing more deals faster, bigger deals, yada, yada.
Makes sense. Cool. No, I love it. Very practical. I guess one last question that I had before moving to the quick ones, just for people to get to know you a little bit better. So we're obviously moving towards a world that values a lot more profitability, finally, right? So I guess my question would be for founders that are trying to be a little bit more efficient or that have currently limited resources, what are some of the aspects of the go-to-market strategy that they can sacrifice, like the must-haves, the things that you would say without this, you're lost, dude?
Ah, founders think about go-to-market strategy too early. It's like you don't even have a check mark in founder market fit, dude, and you're already thinking about go-to-market. Come on. It's like, what is the value that gives your solution? It's context. If you cannot convince the 3 Fs, family, friends, and fools, to either pay you or give give you their money, and you as a founder, if they don't believe you before believing in your product, you don't have a story. So work on that first, right? And really get a sense of specifically what is the value that your solution brings to the table, and try to avoid the founder ego, right? I mean, I'm not a dad. Eventually I'll become a dad, but I think I've never seen a parent say or confess that their baby's ugly. Nobody wants to, say that, right? And that happens in startup universe as well. And of course, I mean, it's your baby. You've invested your time, your money, your resources. It's your dream. Um, of course, you're going to say that your number one solution and whatever the fuck you're building. Sorry, I'm very vulgar. That's just me. It's more me if I
Free
just
speech, free speech.
swear here and there. Um, I think it's really understanding what is the value that um, your company is adding to the market, and that coming from your users, not you. Because if you say it, hey, our value is X, it's told. But if they say it, it's gold. So focus on the gold. Focus on that value perceived from them. Again, your friends, your family, the fools, your first time users, like the reactions on the market, um, and those crazy people that like to try new solutions in software, even though it's buggy. Um, those are my 2 cents.
Beautiful. Now I can go forever, but I want to leave some
Me
space
too.
for questions. So just wanted to wrap up with a couple quick questions to get to know you a little bit better. First, you mentioned maybe like 5 books already, but what's the one book that you give the most, or your other way to ask this, and why?
Fuck, that's a great question. I guess not a book, a person.
Okay.
David Goggins. If you don't know who David Goggins is, go on Google, GPT it. Who is David Goggins? Just read both books, check out the podcasts, check out the interviews. This dude will change the way you look at life from a mentality standpoint. And this dude might change my life from a mentality standpoint. Why? Because he, like, from a very raw, he just tells his life and his life story in a very raw and real way. And it not just gets to you, but you learn about all of the bullshit that we have in our mind that is very self-limiting. And I think that is very, very powerful. Like the power the power of your mind, it's something absolutely incredible. So
Beautiful.
David Goggins.
I don't know him. I just typed it. Thanks for. The second one I had was around habits, right? What's one habit that you consistently practice or follow? One that you say, one thing that you say like, this I cannot miss.
Loving my wife. um, that's a good question. I don't even make my bed every day. I guess cleaning the cat's litter box, that's one. But being very humble with myself. Social media and specifically LinkedIn. It's another social media platform that has been destroyed, for lack of a better word, over the past couple of years. And you go in there and you go on Instagram and you go on fucking TikTok or whatever, and everybody's better than you in every single fucking way. And if you're not kind to yourself, it's going to be very hard for you to be able to just navigate life's challenges. Like, regardless if you're a founder, regardless if you're an operator, regardless if you're an advisor, like if you go into these dark places and start just comparing yourself to others, there's always going to be somebody that built something bigger than you or faster than you or has more money than you, or I don't know, man, better looks, better car, better house, travels more, smiles more. So be very, very kind to yourself. I specifically tend to write a lot. Just every day, 30 seconds. Kind of journaling, if you could see that. But just be incredibly humble to myself.
I love it. I love it. I'm gonna just share the first part with your wife. No worry. That's gonna give you more ROI, I think. Just kidding. No.
Yeah, no,
Yes.
absolutely. Yeah. No, I need everything that I can get in that respect.
Cool. And the last one that I had, Mao, one prediction that you have for the future of sales in the next 5 years. Obviously, everything's changing so much right now, but one thing that you say, like, I think it's gonna go this way.
I don't know, man. That's a loaded question. I think that it might be similar to what Einstein answered with the Fourth World War when he was asked how do you think the Third World War is going to look like. He said, "Well, I don't know about World War III, but World War IV is going to be with sticks and rocks." When they asked him why, it's like, well, because the world's going to go to shit with nuclear bombs and all that stuff in World War III. So we're going to go back to the Stone Age. I think that's going to happen with sales as well. I mean, today, even video clones of yourself, the only difference between AI or at least for now, between AI and humans is that AI can't process emotion yet. Or they can't process emotion as well as humans. So I feel that it's going to come to a point where we're going to get more saturated, if that's even possible. And it's going to be so bad that we're going to crave just in-person relationships, in-person, I don't know, just signing a fucking contract with a pen. I think the world is going to miss that. Yeah, that's
love it,
that's
love
my
it.
theory.
That's nice. And hopefully we catch up in a couple of weeks in Lima in person to support this.
Yes, please.
Amazing. Mau, that was it for me.